Thank you, Alfred, and good morning, everyone. Just a audio check, Alfred, still coming through okay?
Yep, all good.
Great, thank you. Well, good morning, everybody, and welcome to the Novatti December quarter update. This is now my second quarter as CEO, and for those following us closely, I've been driving significant change into the business, from strategy to structure, operating model, priorities, and also optimizing our financing. Essentially a turnaround and transformation, all of which we'll talk further about today. So a quick recap before we get into some numbers and details. Why are we here? So we exist to help businesses pay and to be paid. Now that's a very simple but very important statement of position and difference for Novatti. The payments industry has many payment service providers, but Novatti is clearly different through the two-sided nature of our proposition. We have products supporting both the making and the accepting of payments. So we provide an end-to-end ecosystem from acceptance, processing, settlement, treasury, issuance, remittance, and payables. In doing so, I believe we are a unique non-bank payments business in Australia. We're also very focused on serving mainly medium-sized businesses and the software and platform providers that serve those businesses as our future target customer. And given the breadth of our offering as a business, I believe we are very well placed to benefit from the future long tail of digital transformation in the SME sector. A quick snapshot of key numbers for the second quarter. In Q2, we were deeply embedded and focused on implementing our simplification strategy. Our Q2 revenue came in at 10.7 million, fractionally below the Q1 result, but up 5% over the first half. Expenses are down another 10% quarter on quarter, following a 13% reduction in the prior quarter. And we are now very focused on turning around our bottom line performance. And we have more significant goals on OPEX, which I will speak to later in this presentation. But as a general statement, since the strategy reset in July, the revenue trend is in the right direction. The margin contribution on new business is now far more disciplined, and expenses are continuing to trend down. Just at the end of the quarter, just under $11 million in cash to conclude the quarter. In terms of FY24 and the quarter-on-quarter approach, at the corporate level, the transformation is underway, essentially from a group of disparate, largely independent, subscale businesses into a streamlined payment solutions company. As I've mentioned, we are deep into our simplification strategy and working on improvement quarter by quarter. At a high level, our Q1 focus was on simplifying the business. In Q2, our focus was on initiating and undertaking a strategic review and also identifying sustainable financing for many of our key initiatives. And our Q3 focus will be on implementing a substantial cost reduction program. Some early actions and results as part of that simplification strategy. As a reminder, at a corporate level, the business portfolio is now organised into 4 core divisions. We've initiated a strategic review of all parts of the group, and that review is ongoing. We've determined that our core focus looking ahead will be on payments and the payments Australia-New Zealand market specifically. We've completed and embedded an internal restructure to help execute that strategy, and we have some relatively new leaders across product, marketing, and sales, all making an impact already. We've streamlined the sales process, making it easier for customers to work with us. And importantly, we have now a very tight alignment between the marketing and sales functions, which did not exist previously. And in terms of the results, we've grown group revenue up 5% over the first half. Our margin is improving, especially in our core growth market of payments Australia-New Zealand, which is up 11% for the quarter year on year. And expenses are down 13% and 10% over the last 2 quarters, respectively. So Q2 in some more detail. A heavy focus in Q2 was on optimizing our financing. We divested the stake in Reckon and repaid the corporate bond. A very important consideration in this decision was ensuring that as a business, we had complete flexibility on where and how to optimize our portfolio and make investment and divestment decisions independently coming out of that strategic review. The bond could have imposed restrictions on those decisions, and hence it was the right decision at the time for us to exit from that bond. Importantly, the Reckon commercial partnership remains in place, and while this has been moving slower than we like, we now have over 300 customers, excuse me, over 300 customers in Australia and New Zealand from that Reckon partnership. In Q2, we saw 12% customer growth, and we've now just reached and surpassed $1 million in cumulative payments volume from that partnership. The last element I'll call out here is that we've also recently gained technical access into the Reckon hosted client base, which will drive future volume growth for us over time, given that the customers in that hosted, using that hosted product, are larger customers with more payments volume. Secondly, in Q2, we also made good progress on financing around key initiatives, notably the stablecoin and the International Bank of Australia. On the stablecoin, AUDD closed a pre-seed round oversubscribed at 600K. The stablecoin business will now be self-funded moving forward, removing any further operating cost and drag on the core business. And in terms of the International Bank of Australia, to date, IBOA has raised $950,000 from external investors, with the most recent pre-money valuation just being below $25 million. Novatti currently holds 87% ownership of the bank, and I'll call out there is strong interest in the IBOA Series A capital raising, with additional, more significant subscriptions currently in the negotiation and due diligence phases. Looking forward into Q3, you can see we have been making progress on cost just as a matter of operational discipline. But to achieve our goal of becoming cash flow positive, we need to make more substantive changes. So coming out of the strategic review, we've identified a range of initiatives with a total impact of approximately $4 million in annual savings. The detailed initiative planning around that program is closing out this week, and we will implement that program in February. On the financing side, looking forward into H2, we have a range of potentially significant collateral obligations to support the growing Payment Solutions division. Volume growth in payments businesses requires additional collateral with a wide range of third parties, particularly the card schemes. In addition to that, we have processing floats at peak periods that get larger as we grow the business each year. So we will continue with optimizing our financing. I've announced a capital raise of up to 5.5 million, comprising a convertible note and a share purchase plan. Full details have previously been released to the market on the 2nd of January, so I won't go into further details here. However, I'll point out that the board and management are participating, committing 750,000 in total into the capital raise. So to summarise, looking forward, the strategy is to simplify and streamline the business that is underway and will continue through the coming quarters. We remain committed to the operating cash flow target for the middle of calendar 2024. We are continuing to work on improving margins with a clear midterm threshold established of greater than 70%. We'll shortly implement a step change in our cost base with a $4 million cost reduction program. In February, we'll finalise the strategic review and complete the capital raise, and operationally continue to embed and deepen the fusion strategy within payments to promote cross-sell and integrated payment sales. With that, I'll end the presentation, Alfred, and happy to go for questions.
Excellent. Thank you, Mark, for the detailed presentation. We've had a few questions come in already via Zoom and via email. If anyone does have any they'd like addressed by Mark, please type them into your Q&A box now. First one is from Andrew. Are you confident in achieving positive cash flow?
Yes, Andrew, we remain confident and targeting the middle of calendar 2024. Quarter on quarter, in the most recent quarter, cash use dropped by 6% and overall OPEX reduced by 10%. Whilst that's progressive, we recognise that we need to make a substantive step change, and hence that's why we've initiated and will complete the the cost reduction program through the course of Q3 and Q4.
Following on from that, a question from Paul: will the cost reduction program impact growth?
So the reduction program is not arbitrary. It's been driven out of the strategic review. We've carefully determined and looked at various parts of the business so as not to inherently impact revenue. There are a variety of ways we can do this. For example, we can make more concerted and accelerated efforts to consolidate business processes where they are not consolidated today across the business. A great example is the customer onboarding process. We can work harder to drive more efficiencies through some of our key vendors, like our technology vendors for hosting costs, for example. And so whilst we are looking at all areas of OPEX to contribute to those reductions, I am confident that we can and we will avoid being impactful to revenue as part of the execution of that reduction plan.
A question from Lawrence. The Reckon shares were sold for 40 cents when the market price for Reckon shares at the time was 56 cents. Why were they sold at that low price?
Yeah, that's a great question, Lawrence. So we had a significant stake in Reckon, and obviously when you seek to move a large block like that, there's always going to be a requirement to do that at a discount. What was really important, I'll reinforce it in terms of the timing around that decision, was that the corporate bond that we had over the business could have imposed some significant restrictions in terms of how we thought about implementing the outcomes of the strategic review. That has been initiated, is ongoing, and was really the core driver from my perspective around the exit of Reckon and the repayment of that bond. So we now have full flexibility to make decisions in and around how we run the business and execute the strategy going forward.
Thanks, Mark. We've got quite a few questions around the bank. I might just run through them consecutively. Another one from Lawrence is, IBOA raised 950K from external investors. Will Novatti shareholders be offered the opportunity to purchase shares in IBOA?
So the current Series A round is targeting significant cornerstone investment from institutions and significant high net worth individuals to drive a substantive impact on the bank's balance sheet. In time, as funding for the bank opens up, then I'll expect that to open up to shareholders, yes, indeed.
Question from Harold on IBOA. Can you describe what services this will offer? E.g., will it offer accounts only or lending and payment processing as well? Also, what customers will it serve? E.g., individuals, SMEs, fintechs, etc.
Just to clarify, we're talking about the bank, yes,
the
Alfred?
bank, IBOA.
Bank? Yeah, okay. So the bank strategy is essentially targeted at an underserved segment of the market, which is migrants and international arrivals to Australia, and helping them set up banking services, which is quite difficult right now. That's always been a strategy for the bank. So the bank will offer core banking products around deposits and lending to that particular customer segment. And in terms of payments, then we'll obviously seek to maintain a close relationship with IBOA, where Novatti can provide a suite of payment services to the bank, and the bank can provide a suite of services back into the Novatti Group as well.
Following on, Christopher is asking, can you please explain how the bank license helps Novatti, and are there any other options that could be exploited by this license?
So the bank is essentially an independent business with its own board and management team, and sits under a different regulatory framework. However, from a payments perspective, a large part of our payments business in that payment solutions ecosystem is a cross-border business, and so that cross-border business seeks to target also the same customer segment in terms of international migrants, and helping those migrants remit money through international corridors as part of the cross-border payments domain. And so we feel very strongly that the two businesses can work together to service that target segment with an experience and a set of products that is far superior to what's in the market today.
Thanks, Mark. Question from Peter. Does management have a view about the reason for the recent drop in share price?
I think what you're seeing is a natural market reaction to baseline the price to the structure of the capital raising that was announced earlier this month, and so I think that was just a natural course of events once we announced the capital raise.
Thank you. Another one around the cap raise. Question from Chiang. Why was there a rush for the SPP at such a low value, considering we still have about 10 million of cash on hand, and MST Financial, the joint lead managers on the raise, had a price target of 48 cents in their latest broker report?
Yeah, so I think there's really two questions in there. One is in terms of the raise, as I said, relative to the cash structure of the business today. The raise is designed from a look-forward point of view, and as I said before, as we look forward into H2, there are significant obligations on the business to undertake additions to the collateral position of our business with key suppliers like the card schemes. There are key periods here, as is normally in a processing business, where you have to move incrementally with processing float. So, an operational example of that is, for example, Chinese New Year. So, the Chinese New Year in early February, over 8 days, our support for BPay payments, real-time BPay payments out of Asian digital wallets, WeChat Pay and Alipay, will not be supported with settlement to us from Chinese banks. However, we do need to make real-time settlement into the BPay system. So we have to carry that float for 8 days. And so on the current volumes this year, that will be a 7-figure sum to carry. So there are a range of other business imperatives as we look forward into H2 that drive the increasing demand for collateral inside the business. In terms of the price, if I can recall the question correctly, Alfred, really the price around the SPP strikes back to what we're trying to do there is make it comparable to the structure of the convertible note. And the convertible note pricing was structured by the cornerstone investor into that convertible note.
Thanks, Mark. Just following on with another SPP question. Ryan says, the share price is currently below the SPP off price. Why should we participate?
Well, I think I'll think about that from a long-term perspective, not a short-term perspective. So Novatti is an incredibly exciting business to be in. We are positioned well, as I said earlier, to benefit from the very long tail of digital transformation in the SME sector over many years to come. Most SME businesses in Australia and New Zealand particularly have either not started or are very early on in that digital transformation. In terms of the business itself, we have a great set of assets. We've got great people inside the business. We have a very clear view on strategy. We're starting to see some early results from the execution of that strategy. I have built businesses before. I know what I need to do, and I know how to do it. So we can see a pathway around that starting to evolve in the business now. We can see a pathway to operating cash flow profitability. And so as we continue to execute with discipline around that plan and show improvements quarter on quarter, then I would expect the share price to follow accordingly in the mid to long term.
Question from Steve. What is Novatti doing to adopt AUDD into its own business? AUDD seems to be on a strong growth trajectory.
Yeah, great question, Steve. So as I said there, the immediate and tangible use case, both in the payments ecosystem and certainly within the Novatti business, is in and around the cross-border transfers and the cross-border product line. We're currently working through a design process and essentially some early proof of concepts around how we'll integrate that into the cross-border business. And you expect to see some moving around that done through the course of 2024 embedded into the Novatti business.
Question coming back to the bank. Question from Simon. With the valuation of Novatti's stake in IBOA equal to Novatti's current market cap, what are your intentions with IBOA? And do you have a target valuation at which you'd look to rationalize the stake?
So in terms of the bank, as we said last quarter and have made public, there's the Novatti Group will not be making any further investment into the bank. We have a prudential requirement to reduce our stake into the bank over time as it exits its restricted license and goes into full operations. The outcome of that after the Series A in the near short term really depend on how that Series A funding round closes out and finalises. but we haven't set a timeline around that target other than over the long term. Obviously, from a regulatory point of view, it will need to come down below 20% inside the bank. In terms of a target valuation, not at this point in time, and we don't have a specific timeline around that reduction at this point. It will depend on the Series A and subsequent capital raisings.
Thanks, Mark. We are starting to get through most of the questions with just a couple left. If anyone does have any, please type them into your Q&A box now. Question from Julia. Where is the growth coming from?
So, Julia, the future focus of the business is as an integrated payment solutions company with a particular focus on the Australia and New Zealand market. That division is where we'll continue to focus our investment in product, people, and process. What we have in the foundational ecosystem there that the business has built with the end-to-end value chain around payments is really quite unique. As I said earlier, I don't believe there is another payment services provider in the Australian market that has a similar end-to-end value chain set of capabilities. And so that's really the cornerstone of the value proposition we seek to take to market. We've got some work to do to get the commercial engine in front of that working to drive into segments and vertical markets at scale in a repeated way. But in the near short term, we see the core verticals of education and accommodation as being near short-term targets for us for growth, where we have some a pre-existing customer base, a very strong proposition, and some pre-existing market knowledge.
Thanks, Mark. Question from Andrew. Is this new simplification strategy working to attract new customers?
So one of our challenges in the payment space is that our brand isn't as well known as some of the other brands that have been around for a much longer period of time. So we have to work harder to attract customers. However, the answer to that question is yes. And I'll say there are two components to that for me that are driving, that will continue to drive our success. And the first is that we are making it easier for customers to deal with us. So under the new Fusion structure and the integrated payments division, customers can now work with a single person in terms of understanding the business, understanding a solution design, and onboarding through the Novatti business. Whereas previously, if you took 4 different products, you had to deal with 4 different sets of people and 4 different business units. So that is now a much easier process that we have taken away much of the friction. And secondly, I would say the pathway is we are now, from a marketing perspective, very, very focused on identifying and selecting and onboarding particular types of customers that are a good fit for this business and that match to the strategy of the business, which is to sell into needs and problems and opportunities where a customer can take more than one product or service over time. So we are transitioning from essentially a sales-led, product-focused business to a market-led, customer-focused business where we can penetrate markets and penetrate customers with multiple products and services over time. And then we're starting to see that happen inside the business and getting early feedback from customers that we're actually looking and feeling like a joined-up company.
Thanks, Mark. We've had a few questions just come in the last couple of seconds. Anthony's asking about AUDD. Are current Novatti customers being assisted in understanding and ultimately using AUDD? Yes, I think the answer to that is generally yes. However, the demand there in and around the execution of how we take existing solutions to market to some extent is driven by current problems and current needs of customers in market today. AUDD is really on the leading edge. It's quite an embryonic product, and there is still a level of market education and market acceptance that the industry needs to work on, as well as Novatti's work on, to continue to educate customers on how it can benefit particular problems and particular use cases in businesses. So there's more to do there. Thanks, Mark. Another one from Chiang. When do you expect the Series A funding round for IBOA to close? Could you provide an indicative month? I'm actually, I can't be drawn on details there in terms of when it will close. What I will say, and repeat what I said earlier, is that there are
We've been successful at a smaller scale through calendar 2023 in receiving external funding. We are now, as I said earlier, in process, or the bank is in process with several additional subscriptions that are much more significant, that are in detailed due diligence, and we'll update the market at the appropriate time as soon as they are able to close.
Fantastic. Thank you, Mark. That is all the questions. If anyone does have any more, feel free to email them in and we'll get a response from Mark via email. A recording of this webcast will be made available in the coming days. But Mark, on behalf of all the Novatti shareholders in attendance, I'd like to thank you for your time today, and we look forward to hearing from you again soon.
Thanks, Alfred. Thanks, everybody.